As we navigate through 2024, global inflation rates are hitting record highs, significantly impacting the purchasing power of individuals worldwide. We're living through a time of economic transformation, where the costs of goods and services are climbing at a pace unseen in recent years. Reports from the International Monetary Fund and the World Bank paint a vivid picture. The global inflation rate is projected to average at a staggering 5% this year, with some regions shouldering even steeper rates. Just imagine your money's value eroding at 5% per year. In the face of this financial storm, it's easy to feel powerless. But there's no need for despair. The key to weathering this storm lies in understanding these inflation trends. By grasping how and why inflation is rising, we can start to strategize, to plan, and to take action that safeguards our financial future. Because remember, knowledge is power, and understanding these trends is crucial in safeguarding your financial future. So, what can you do to combat this economic adversary? Enter strategy 1, diversify with inflation-resistant assets. Inflation can feel like a daunting opponent, but fear not, there are ways to fight back. One such method is to diversify your investments with assets that are resistant to inflation. Now, you might be wondering, what does inflation-resistant mean? Well, inflation-resistant assets are those that tend to hold their value or even increase in value during periods of high inflation. These are the superheroes of your financial portfolio, standing strong when the economic climate gets tough. First, let's talk about gold. Gold has been a classic hedge against inflation for centuries. Why? Because it's a finite resource. You can't just make more gold when the economy demands it. And in the past year, the value of gold has seen an increase that outpaces the average inflation rate. So, it's no surprise that many investors turn to gold in times of economic uncertainty. Next, let's discuss real estate. Real estate is another asset that often appreciates in value over time, making it a solid choice for inflation protection. In key markets, property values have grown significantly in the past year, outpacing inflation rates. This can create a buffer for your finances against the eroding effects of inflation. And then there are Treasury inflation-protected securities, or TIPS for short. These are government-issued bonds that adjust in value with inflation. As inflation rises, so does the value of TIPS. This makes them an attractive option for those looking to safeguard their investments from inflation's sting. These assets have shown resilience in the face of inflation, making them a worthy consideration for your portfolio. Remember, the key to successful investing, especially in uncertain times, is diversification. By spreading your investments across a mix of assets, you can better weather the storm of inflation and safeguard your financial future. Moving on to strategy 2, invest in stocks with pricing power. In the of rising inflation, there are companies that stand out from the crowd. These are firms with what we call pricing power, the ability to pass on costs to consumers without losing market share. It's a business's strength, its resilience, that enables it to maintain or even increase its profitability during inflationary times. Take, for example, consumer goods companies. When inflation hits, these companies can adjust their pricing strategies, passing on the cost to the consumer and preserving their profit margins. Procter & Gamble, a leader in the consumer goods sector, reported a 4% increase in revenue in the last quarter by adjusting their prices in response to inflationary pressures. It's not just consumer goods companies that demonstrate power. Technology companies, particularly those offering software as, are another example. Microsoft, with its subscription-based model, Office 365, provides them with a steady revenue stream. When costs rise, they can tweak their subscription fees, passing the increase onto their customers, again without a significant loss in their customer base. And then there are the luxury goods companies. Their customers are less price sensitive, allowing these firms to raise prices without fear of losing market share. A prime example is Louis Vuitton, in the high-end fashion industry, where brands can their prices and their clientele stays loyal despite a 5% increase in their product prices last season. But how do you identify companies with pricing power? Look for firms with strong brand loyalty, unique products or services, and a dominant position in their market. These are all signs of pricing power. These companies like Procter and Microsoft and Louis Vuitton could lead to profitable investments, even in inflationary times. Strategy 3 emphasizes the power of knowledge. Increase financial literacy and skills. In the face of rising inflation, knowledge is indeed power. It's an often overlooked yet highly effective strategy. The more you understand about finance and investment, the better equipped you are to make sound decisions that can weather economic storms. A recent survey by the Financial Education Institute has shed light on this. The study found that individuals who are financially literate were 30% more likely to report positive investment outcomes, even in the midst of inflation. They understood the market trends, could interpret financial news, and made informed investment decisions. In essence, they turned the challenge of inflation into an opportunity. So, take the time to read financial literature, attend webinars, take online courses, or even engage a financial advisor. Empowering yourself with financial knowledge could prove to be your greatest asset. Next up, Strategy 4, Real Estate Investments. Amid the inflationary storm, real estate has emerged as a reliable haven, offering investors a strong hedge against inflation. It's a classic case of supply and demand, and this year, the scales are tipping in favor of savvy property investors. Rising inflation has a silver lining in the world of real estate. As the cost of living increases, so does the value of properties and the rental yield they generate. In fact, data from the Real Estate Market Analysis Company reveals that average rental yields in major cities have seen an upswing, surpassing inflation rates and offering investors solid returns. In the same vein, property values have also seen a surge. This year, key markets have reported a substantial increase in property prices, outpacing the average inflation rate. When you invest in real estate, you're essentially buying a tangible asset that appreciates over time, making it less susceptible to the erosive effects of inflation. But let's not forget, real estate isn't just about buying a property and watching its value grow. It's about strategic location selection, understanding market trends, and leveraging rental income for steady cash flow. It's about harnessing the potential of a property to generate wealth, even in the face of economic uncertainty. So if you're looking to turn the tide on inflation, consider expanding your portfolio into real estate. Whether it's residential, commercial, or rental properties, the real estate market provides diverse opportunities to secure and grow your wealth. Remember, the key is to stay informed, be patient, and make calculated decisions. Real estate could serve as a strong anchor in your investment strategy during inflationary times. Finally, we arrive at Strategy 5, Entrepreneurship and Side Hustles. In the face of inflation, one of the most empowering actions you can take is to create your own income stream. This year, the entrepreneurial spirit is alive and well, with certain sectors showing remarkable resilience and growth. The e-commerce sector is one such example, with online retail sales growing exponentially, presenting lucrative opportunities for side hustles and new business ventures. Whether it's starting an online store, offering freelance services, or launching a tech startup, the possibilities are as diverse as they are promising. Meanwhile, niches like renewable energy, digital marketing, and remote work solutions are flourishing, offering fertile ground for innovative ideas and ventures. By identifying these growth sectors and aligning your entrepreneurial efforts accordingly, you open up a world of opportunities for financial growth and independence. In a world of rising prices, creating your own source of income could be a game changer. Now that we've uncovered these 5 strategies, the question remains, what's your next move? The world of finance is a vast and complex space, and it's easy to feel overwhelmed. But remember, each strategy discussed today is not an isolated tactic, but rather a piece of the larger financial puzzle. Whether it's diversifying with inflation-resistant assets, investing in stocks with pricing power, enhancing your financial literacy and skills, exploring real estate investments, or diving into entrepreneurship and side hustles, each plays its part in helping you navigate the stormy seas of inflation. Think of these strategies as 5 pillars, each supporting your financial fortitude. But don't worry, you're not alone in this journey. A world of knowledge waits just around the corner. The journey to financial freedom continues right here on our channel, where we'll explore more strategies, trends, and tools to secure your financial future in these challenging times.